Welcome back to my channel. Today I'm going to be talking quickly about the tax saving strategies that you can use as an individual to help yourself save some money on taxes. I will have another video up shortly for small businesses. So today I'm going to be brushing on the UK tax system and the US tax system, but please be aware that this shouldn't be taken or assumed as the final advice that relates, because I don't know what your tax status is. Although I trained as an accountant, but I'm not acting as your accountant professionally. I'm just here to share tips that you can use. So when you hear some of the things that I'm going to be raising or discussing today, you can take this back to your accountant if you have an accountant that deals with your accounts. And I know that some self-employed people or freelancers, some of them are quite savvy in regards to submitting their returns. They're able to compute and send their returns to the tax authorities. But some people still employ the services of accountants or other tax professionals to help them. In either way, some of the tips that I'll be sharing today, you may know about them or you may not know. If you're into all this, you probably might know some of them, or if you don't know, you can take some of these tips, go back to your accountant if you have one, and ask them, discuss with them how they can utilize these tips to help save you some money in tax. So without wasting much time, if you're new here, my name is Claire, and I am here sharing tips, hacks, and tricks that I've used to get to where I am today. I trained as an accountant, but I'm not practicing professionally at the moment. I've worked in the banking sector, in an accounting firm, in the medical sector. I'm an entrepreneur. I've got some businesses, and I do quite a lot. Okay, so this today, one of the main ways that you can help to contribute to your tax savings as an individual is by contributing to your retirement. I know that some people might feel like it's too early to start talking about retirement, but honestly, it's not that way. The sooner you get started with this, the easier it becomes, and then it doesn't feel so onerous, you having to worry about it, because you don't have to wait until you're in your 30s or 40s or 50s or whatever before you start to think about it. You can start at any time, even in your 20s. All this will help to compound whatever savings or money that you're putting away for the future. Okay, so and the benefit of contributing to your retirement accounts, such as IRA in America or health savings account, what they call the HSA, is because these are tax deductible. Okay, so these contributions will help to reduce tax burdens on you, and they will also help you to save for the future. In the UK, you can contribute towards ISA, or you can buy stocks and shares. These things are tax-free. They can allow you to save or invest up to a certain amount before you start to worry about paying tax or capital gains tax. Okay, so number 2 is utilize your tax credits. All right, all the deductibles that you are entitled to, make sure you get your accountant, or if you're the one doing it, search or contact the relevant organizations or departments that deal with this to find out if you're eligible and how much you are eligible to claim. A lot of people are not aware of their eligibility for a lot of the things that they can actually claim for, one of them being tax credit. So tax credits, marriage allowance in the UK, working tax credits, and even gift aids and all of this. I'll discuss gift aids later on. But all of these tax deduct things like the working tax credit, child tax credits, and all of those marriage allowances, you can get yourself acquainted with how you can find whether you're eligible. Either you can call these departments, as I mentioned before. So, and another one that I understand that impacts upon tax, especially if you're in the US, is your your status, whether you're married or you're not married. I know this is similar to our marriage allowance in the UK. So when you're filing your taxes, make sure that you put your correct status, whether you're single or married, because I think there are some tax deductions that are also applicable in the US. So and then number 3 way or strategy to save on tax or to maximize tax savings is to maximize your pension contribution. Yes, it's one of those things again. We don't often like to jump into talking about pensions and retirement, but it's very crucial that we do that, and you have some tax benefits to that. So if you increase the amount that you are contributing towards your pension in the UK, that what that does is that it kind of reduces your tax liability. So what you then have available to you as your income then gets reduced, and if it gets reduced to the point where you're not even no longer meant to pay tax, then depending on how much you earn anyway, because the UK 2023/2024 personal allowance is the amount of income or earning that you will be allowed to hold on to yourself. It is tax free. So any amount beyond that amount is when you then become charged for tax. And the amount I think for that year, this year, is 12,500 and let me just be sure. I think I noted it somewhere when I was doing my research. So for 2023/2024 is 12,570. It changes every year. Okay, so this is what you are allowed to keep to yourself before you start to pay tax on anything on top of that. Okay, so for capital gains tax as well, capital gains tax is another means that you can help yourself save some money on taxes. So if there's also capital gains tax allowance, right? In regards to capital gains tax, for 2020 up until April 2023, it was 12,300, but they've slashed that amount to 6,000 now for this tax year. And from what I learned, from April 2024, it's going to be slashed even further down to £3,000. So if you sell any possession that you've got, like any assets, you have an allowance for up to £6,000. Anything above that, you're going to be made to pay tax, capital gains tax on that. So bear that in mind when you're trying to find tax savings for yourself. Just take into account any assets that you may have disposed of or you're planning to dispose of, and be sure to speak to your accountant if applicable, or if you're rendering your return or you're doing self-assessment by yourself, be sure to take all that into account. As I said before, please do not take this as your final professional advice or anything. These are just tips that I'm sharing so that you're aware of this when you're doing your tax returns or when you're having discussions with your tax professionals or accountants. Okay, so the capital gains tax allowance that I've just discussed, there's something else that you can do to maximize your tax savings. If you want to sell some investments such as some stocks or shares or some personal assets that you may have, you can plan it in a way that the sale of those investments or assets happen at a time that it will be an advantage to you in regards to the reduction or the impact it will have in your overall tax bill. Okay, moving on to the next one is investing in tax advantaged accounts. In the US, they have things or schemes such as the 529 plans for college savings, municipal bonds, 401k plans, and things like that. And then in the UK, we have ISA, we have the child trust funds. For instance, for the child trust funds account, you can pay in up to a limit of £9,000 each year. So that means that you as a parent or both parents, including friends or relatives who wish to contribute towards your child trust funds account, you're all allowed to pay in up to the maximum of £9,000 each year, and that amount is not taxable. Okay, so that's another way of getting some sort of savings in terms of taxes that you pay for the year. So then moving on to the last one I'd like to talk about is gift aid donations. So gift aid allows the charity that you donate to claim back the basic rate of tax on the donations that you've made to them. For instance, if you've donated to a charity, this can also allow you to get some sort of additional tax relief. If you have an accountant who does this for you, it doesn't hurt to ask them just to check that they are taking all this into account. So you make sure that you are, if you are able to invest in these sort of accounts, obviously these have some tax relief associated with them. Okay, another thing is timing of your deductions and expenses. So if you are able to manage a situation where your expenses for the year, especially what I'm saying here is for like self-employed or freelancers who submit their accounts, not people who go by PAYE. In the UK, PAYE is pay as you earn. They deduct taxes at source before whatever is left is then given to you. But if you are one of the self-employed like myself and you are submitting your account by yourself or through an agent, your accountant, be sure to discuss all this with your accountant to be sure that they are taking full advantage of all of the tax relief potentials or strategies or advantages that you have, okay, before you pay your tax. So the time of deduction, there are some years, if your business hasn't done so well in certain years, or if it's done so well in another years, you can claim some expenses on those years that your business has done really well, okay, so that this can reduce the amount of money that is left for you or your taxable income that is available for you. All right, if you have any questions, please, you're welcome to drop them on the comments, and please don't forget to subscribe, like and share, and turn on your notifications, because I will be uploading shortly the strategies that small businesses can use to save on taxes as well. All right, until next time, thank you for watching and see you soon.